Welcome to our channel, and more importantly, welcome to our free weekly stock market breakdown, which is released every Sunday at 2 p.m. Eastern Standard Time. In these breakdowns, we will cover the latest news developments that will affect the market, as well as break down the broad market and other instruments for opportunities that may be brewing this upcoming week. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content. And also remember to turn on our channel notifications so that you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description below. Let's get right into it. We're going to start off today talking about the US market because not much has changed from what we discussed last week. The only latest development is that rather than passing a $1.8 to $2.2 trillion bill, the Senate is going to vote on Wednesday on a $500 billion bill that is only going to target specific sectors such as the airline industry and the payroll protection program. This is no way near enough money what the country needs at this point in time in order to sustain a bigger recovery than what we've gotten already. But this is one of the latest developments that's going on that we have to take into consideration looking at the market this week. And we'll consider this when we look at the stock market breakdown for the US later in this video. Moving on, what I consider to be the biggest development this week, or last week rather, in the news is actually what's going on in the UK right now. It seems as though every week that passes, more and more the UK goes on lockdown, with London beginning their lockdown over the weekend. So most of the country now is locked down, which is definitely going to hurt the markets and has already started to hurt the UK 100 market. So what does this mean? This means that we could be looking at trading opportunities in the UK stock market for looking at more downside and potentially make some money on that front. To make matters worse for the UK, Prime Minister Boris Johnson has basically stopped trade talks with the UK, making it more and more likely that there will be a no-deal Brexit, which is also bad for the UK stock market. So the UK is getting hit by a double whammy right now, and it definitely looks like that the stock market may have a reaction to this on Monday and throughout the rest of the upcoming week. Now, let's start our technical analysis by looking at the UK 100 chart on the daily. As you can see here, we've been in a consistent channel downtrend in the UK 100 ever since around the 10th of June. I don't believe that this is going to change anytime soon, so I'm definitely looking at more downside and continued downward movement in the UK 100, which has been the big laggard of all the global equities and the biggest underperformer of every single index in the world. As you can see here, we have our yellow zone, which represents our weekly zone, and our red zone, which represents our daily zone. So right now we're trading in between a big weekly zone and a major daily zone. And essentially what I'm going to be looking for over the next couple of months, because of all the news that's going on in the UK, is one of a few things. Either we're going to have a breakout of this channel, we're going to retest the daily zone and head all the way down to our lower weekly zone, which is actually the lows that we hit during the first crash of the market back in March. On the other hand, we may see a different scenario play out, which will be we head back up to the top of the limit and we continue to bounce within this channel. But either way, definitely a big bearish outlook on the UK 100, and I don't foresee any form of recovery happening anytime soon. The next instrument that we're going to take a look at, staying along the theme of looking at a weak UK market, let's look at the pound versus the yen. So because of all the news and the fundamentals, I'm definitely looking at some form of pound weakness entering the market this week. As we can see, we've actually had a little bit of weakness stepping in, but we're trading right above a daily supply and demand zone. So essentially what I'm going to be looking for to take a trade in the pound yen is going to be a break, a close, and a retest of that daily level to take us down to the next daily level. Now bear in mind, this trade may take a while to play out because this is quite a large move in the pound yen. However, I do think that this is a realistic target given everything that has happened over the past few months with the UK, and especially with Brexit not really going their way. I do think that if the deal does not pass, or if there's definitely what they've said is true, and there's going to be no more negotiations regarding Brexit, and a no deal Brexit is definitely going to happen, then I do believe that this is going to send the pound down from where it's sitting now at around 136 to around 130 to 131. So that's definitely something to keep in mind, especially if you do trade the currency markets. I want to give a little bit more of a variety on this channel and not just cover stocks alone. Moving back to the US equities, let's take a look at my favorite index in the US market, the S&P 500. So if we drop back down and remember our analysis from last week, looking back at the 1 hour time frame, this is what we had in from last week on what we was expecting. So it looks like this is going to be playing out exactly as I'd anticipated. We had a fall through the supply and demand zone a bit, but we've retested this trend line, and now we've come back up to retest this daily supply and demand zone that we have right here. So essentially everything that I've stated from last week is still in effect, and I'm looking for another move up to the next supply and demand zone. Now this is only going to be dependent on what happens with the news this week, so I'd be very cautious with entering this trade and just keep an eye on what's going on fundamentally in the US market. If any form of stimulus deal is passed this week, even if it's just that $500 billion bill that we was looking at earlier, then I definitely think that this will send stocks higher to trade back at the previous highs of around 3,572. So keep an eye out for this. I'll be posting on my social media channels on what I'm doing at that time and giving some guidance towards what's going on in the market, so that possibly we could take this trade together, and I'll also let you know if I end up taking this trade. Now we're going to end this video by covering everybody's favorite instrument to trade, and that's gold. And as you can see, our setup from last week failed because we was waiting for a break above this daily level, a retest of it, and a continuation to the upside. And I'll show this on the 4 hour chart just so that you can see it a little bit better. But essentially we was waiting for this scenario to play out, a retest of this zone to take us back to around 1970. However, as you can see, this setup failed and we broke back below that zone, and now we're trading in kind of no man's land, which is in between a major weekly zone and a major daily zone. However, over this past week, I've kind of had an epiphany, and I've realized that there's something going on in gold that's a little bit more relevant, and I've changed my bias. And it's okay to change your bias whenever you're trading, because it makes you very adaptable and you trade what you see and not what you feel. And right now what I'm seeing is that my bias has changed, and I'm looking for a downside move in gold rather than move to the upside, at least for the short term. So how have I come up with this idea? Well, if we go back up on higher time frames, looking here at the weekly chart, I've been able to realize that gold is actually sitting in a massive uptrend, which is supported by these lines right here. Now I've plotted these trend lines and spent quite a while making sure that I've got the accurate levels in here. But if you look, we can see that these trend lines have been respected for quite a while, including having full break close retest and continuation patterns all over the place, showing that these trend lines are actually extremely valid because of these price action patterns that have occurred around them. So if we look where we're trading in current price, as you can see, we're actually sitting right below this median line, and so because of this, we're looking at a downside move instead of an upside move. The only thing that would invalidate this move to the downside would be if we break back above the median line, we retest the daily zone as well as the median line, and that would take us up to the top of the trend around $2,080. However, because we're trading below the median line, my bias has shifted to a bearish view, and what would make us enter this trade would be if we get a daily break close and retest of this weekly zone, which would take us down to the next zone down, or possibly to the bottom of this trend line, which would be around $1,750. We have to follow what we see and not what we feel. And actually, these type of corrections for gold are quite normal in bull markets, so I wouldn't be surprised if within the next few weeks we're trading down here around 1750. So keep this in mind. I'll be posting on my social media about how this trade idea is working out, but last week's trade idea failed, and so now I have to reassess the market and see what's going on so that we can make some money hopefully this week. So this concludes our second market breakdown video on our financial progression channel. Thank you to all who took the time out to watch this video, whether it be in part or the entirety of the video. I aim to continue to develop these videos and bring higher quality content to the channel in the coming weeks. I will also be posting educational content on the channel, and I've actually just completed my first video that I'll be uploading sometime this week that's suitable for both beginner and experienced level traders. If you haven't already, help us out by dropping a like on this video and subscribe to the channel so that you don't miss out on any of our future videos. Thanks and peace out.